Most traders only lose reversals for one reason. They have no idea what a real shift in structure looks like. My name is Derek Bathgate and I'm going to walk through the only two reversal models that I use that help me gain a 78% win rate over 250 trades. And the thing is with these models is that it is nothing complicated. You will see it on the market near enough every couple of days. And apologies, before we get into this video, I have done a couple of Muay Thai sessions today, so I am absolutely drained. Even trying to string some words together Even trying to string some words together is an absolute hassle. But first off, I will show you my chalk-based reversal, what counts as a real change of character and how I confirm it. Then I'll take you through my M5 reversal model. This is a more refined, higher percent return reversal model that usually occurs after an M15 change of character, and it lets you market enter instead of waiting for a limit entry. But anyways, let's get into the charts. So for our reversal chalk model, reversal change of character, what we will need to see is Asia development. Everything needs to occur from Asia. Every trade you take will be dictated by how Asia develops, because Asia is solely just a liquidity time zone. Price usually just puts in equal structure, or we have an expansion lower that sweeps, and so that's how we get into our continuation model. But for a reversal change of character, we see Asia's development. During London Open, price takes the low of Asia, expands higher and takes the most recent M15 leg, that would be our liquidity sweep, and our break of structure. All we need to do now is set a limit order from the break of structure to the low of the sweep, pull back to where you will get limit ordered and target your set TP. That's how you play a reversal change of character. And the reason you don't enter solely on the break of structure after the change of character, because you don't know if it's actually just going to be a sweep of liquidity to where price then continues down and just goes lower. So you always need to see that pullback, because that confirms if price is going to hold that current leg. So if we go over to a live chart example, as you can see, we are currently putting in bearish price action. So what we can expect is, as this is our current M15 leg, or sorry, this one is actually as that swept liquidity and broke structure, this would be our next liquidity target. So first off, price broke structure, which confirmed the bullish shift, but as we're only looking for shorts here, we will need to see an expansion out of London's high, and as this is our current leg, we will need to see this low to get into some sort of change of character reversal trade. So we have this expansion during London. This expansion creates a new leg as it breaks structure, sweeps liquidity. Once price broke this low, we were confirmed bearish. And all we need to do now is set a limit order from the break of structure to the high of the London expansion, drag it down to around a 2R trade, wait for a pullback, that's us tagged in. Price then dives to TP. Here's another example, but it is out with hours, but it's still good for visualization. We have that sweep of liquidity. Break of structure. All we need to do now, set a limit order from the break to the low of the liquidity sweep. Target, say, this swing high for a 1.5 or target a 2R. Wait for a pullback, tagged in, expansion higher. And now we have our M5 reversal model. But the sole difference with this one is that it occurs after our initial M15 change of character. So this is more of your continuation reversal model, where this allows you to target higher returns, but you need to have a set clear liquidity target. So for example, say this is the M15 leg, we have our liquidity sweep break of structure, we are now bullish. After that break of structure, price comes back down within that current leg, Asia session develops, price expands lower and continues higher to take out some form of liquidity within the H4 leg. The difference with this trade being is that as we already had that change of character, we do not need to wait for a further break of structure. That's why you market enter solely on the M5 break. So we have that break, liquidity sweep, take your entry and cover the area that broke structure and the low of the sweep. And as soon as price breaks this M5 high, you market enter. So for our live example, we already have that initial structure shift, an expansion out the low during London Open. As we are putting in higher price action, we will now target this next M15 high. Move to the M5 time frame. As this is quite a big leg, we will need to wait for this high to go. Cover the low, target a set 2R. Here, you would have market entered and price runs to your TP.